The CFPB says banks should be ready to mitigate avoidable foreclosures. Borrowers with privately backed loans are still struggling, and one economist says he knows how to fix the housing shortage. Hello, and welcome to the 90-second Real Estate Rundown. If it's your first time here and you can't tell by the name, we review the top headlines in real estate in 90 seconds or less. And it goes a little something like this. The CFPB issued warnings to lenders to prepare to deal with the onslaught of foreclosures later this year when the moratoriums expire. The CFPB says banks need to reach out to homeowners now about options for modifying their loan terms to prevent what the Bureau calls avoidable foreclosures. The CFPB also said that lenders who put struggling borrowers first will have, quote, nothing to fear from our oversight, but we will hold accountable those who cause harm to homeowners and families. Many homeowners with private mortgages not backed by the government are still struggling to hold onto their homes. About 30% of all mortgages are privately backed, which equals to 4.5 million households. Because these loan holders can create their own terms, owners get limited relief, if any at all. And some are asking that the missed payments be made up in a lump sum, or requiring borrowers to provide documentation every single month to extend relief. The Mortgage Bankers Association said 22% of non-federally backed loans who left forbearance are not current on payments, and these owners are not protected by the foreclosure moratorium. The supply of homes for sale is hovering near record lows. While the Biden administration has plans to move first-time buyers into the market with a tax credit, the chief economist for mortgage broker site Houzz, that's H-A-U-S, is proposing the government actually incentivize owners to put their homes up for sale. This way you can motivate investors to income properties by way of a capital gains tax exemption. He also proposes raising taxes on single-family rental income to move those landlords to sell. However, he admits trying to get investors to sell can leave a shortage of rental stock. A survey from WalletHub aimed to uncover the level of financial literacy in America. The answer, overall not so literate. The National Association of Realtors published a similar report last year and drew the conclusion that financial literacy has a direct correlation with home ownership because it impacts savings behavior. The WalletHub report includes state-level data for credit scores and financial literacy education. Virginia, Utah, and Colorado rank the highest for credit scores and financial literacy, and Arkansas, Mississippi, and Louisiana are among the lowest. Thanks for watching. That's all for today. If you'd like to subscribe, you can. I'd like that very much. Until next week.